on my previous series, I've been talking on how to trade gold profitably. You get, so in today's video, we are going to be talking more on how you can maximize a winning trade and also the risk management aspect of Forex. So I'm going to make it very quick and straight to the point. And if you're new to this YouTube channel, do well to hit the subscribe button, like this video, turn on post notifications to be notified whenever I drop Forex related videos like this. You get, this is more like a series, and we are going to be doing the last part this Friday, so stay tuned, guys. And now let's go to the chart. Before we talk on how to maximize a winning trade and make more money from it, we need to know the risk management aspect of trading in Forex. You understand the risk management aspect, especially when it comes to gold, because their calculations are a bit different. So now on gold, the position size calculator I use to calculate my risk, to know how much I'm ready to risk per trade in case a trade goes against me, so that it will not be a risk that I can't afford to lose. You understand? Don't make that mistake. Before you even place your buy and sell, before you even jump into the trade, so as not to miss it, make sure you your risks are calculated before even placing that lot size. You understand? So that you don't start regretting and get emotional. You understand? So now the first position size calculator I use is my FX book. Yeah, let me refresh it. It's my FX book position size calculator. You can go on Chrome, just search for my FX book position size calculator, then click on gold. Let me just show you how it looks like. My FX book position size calculator, just search for it like this. This is where it will bring you to. Click on gold and it will land you to this particular page. You understand? So I think there's an advert that is to pop up, so let's continue. So now this place is where we calculate all our risks on in Forex trading before we go to our MT5 or MT4 to place that trade with that particular lot size. Okay, so now the account size, let's say we are trading an $100 account. Now this risk ratio means the risk percentage you are ready to risk, like out of this $100, how many percent do you want to risk? If you don't know the percentage, you can click with swap with money and write the amount. That is if you know the amounts equivalence, but you don't know the percentage. You understand? You can click swap with money and write the amount. Let's click swap with money and write maybe $25. I'm ready to, but you might be ready to risk $10. You might be ready to risk $5. You get. So now remember, the currency pair is XAUUSD. Now the stop loss is this. Remember from the first video I showed you guys how to calculate pips, right? On gold. Now let me show you this. Use that exact example we used on gold. Now let me show you that trade, that buy we were expecting for a long period of time. You know, it actually later happened, later played out. Let me show you guys. Let's use it as an example. Let me clean the whole chart. So we said if gold comes to this particular zone, what should you expect? A buy. And I'm glad everybody in the comment section was saying buy. So it means people were following up. So let's go to the 15 minutes time frame, because gold actually came to that zone and just kissed it and went to the sky. It moved to the moon. So this was it, that spot here, and our stop loss. Now this is what those positions as calculator are asking for, these stop loss pips, right? And now our target was, let me go to the 1 hour time frame. It was where this market was consolidating this point. That's where I actually kept my targets, because it's a strong zone on its own. You understand? It was a strong zone on its own. Okay, so my stop loss was around 25 pips. It was actually 25. So my target initially was this spot here, this zone here, because remember it was consolidating. We judged a zone from like this. Remember, those that have been following, you will know that there was a zone like this, another one below somewhere here. If I'm not mistaken, there was another zone like this actually. So we were expecting gold to do what, drop to this point before it buys. Now let's say for instance this particular trade as an example. Let's use it as an example. This was the target. Yeah, it was 1:7 actually. Okay, so this stop loss is what they're asking for. How many stop losses actually you are about to take, because calculation is meant to happen even before you place a particular trade. So the stop loss is what, 24 pips. So I go to my position size calculator and I click I'm ready to risk $5. I'm click swing 24 pips. So now this trade size is what I want you guys to pay attention to. Make sure you remove 10 from this 0 here. It should be 0.01, not 0.001, more like an analog size. No, the default one is what, 0.001, but remove 10 so that it will become the normal 0.01 we see on MC4, right? Okay, and click calculate. it tells me the lot size I should use in order not to lose 5% of $100, and 5% of $100 is what? $5, right? Okay, tells me the lot sizing here. This is the lot size you should use, 0.02. So it means if I use 0.02 here, I just place the trade here, 0.02. If this trade goes in my favor and hit TP the way it played out like this, it means I'll be coming out with what? 1:7 of this. That is 5 times 7. You understand? It means I'll be coming with $35 if I'm not mistaken with the calculation. You understand? $35 or thereabouts. You get if this trade hits this particular TP. So I'm risking $5 to make $35. If I'm risking $100, I'm risking $100 to make what? Times 5 times 7 of $100. That is $700. If I'm risking $1,000 here, it means I'll be coming out with $7,000 as this trade hit CP. So you see how it was the risk management aspect of gold. Now, in terms of maximizing trades, I said I would use those same example that I showed you guys on the last video. So let's go back to this particular zone example we did. This particular spot. We can even show this one, but let's just use this part. I don't want this video to be long. Let's just use one, and I'll still come show you on this particular trade too, how to do it too. So let's go to the 5 minutes. Remember, it was from the 5 minutes we saw our entry. Okay, so like I promised you guys, we are going to do the example here with this trade and still use the current trade we had that buy. So now the neckline, this was actually the neckline. Those have been back. I see a lot of people giving good reviews about this strategy, like they have tested it and it's really crazy, right? So guys, stop playing. You need to put in the work. Backtest. Don't think you're just learning and you get how it works. You need to backtest to put in the work to make it, like, to get familiar with it. You understand? So this was the trade here. Now when it's pushed up, let me bring it in so that you would see it very well. So now when it pushed up, it came down, went back up again, did this little minor retracement. This pattern is a pattern I've taught those in the academy, both in Fire Pips, you understand, and my personal academy. This particular pattern is something I've showed them, you understand. This one candle causing a retracement. In this kind of pattern, I said the retracement, if it's a retracement is coming back, it's going to be below it and not above. The way we used to do our F and R zone, that is going to be what? Below it. Let me use horizontal ray. Yeah, below it. So this, you know, markets, the way market used to move, even if it moves like it leaves you, let's say for instance you're waiting for a move and it happens already before you even come on your charts. Market doesn't just move like that, you understand. It will still create opportunities for those that are just coming in late too, you understand. So let's say you came in late now, or you are currently on this trade. This is 1:14 risk to reward, because the stop loss was below the candle that broke out of that particular zone. It was 1:12, yes, so 1:12 now. So now this is another spot of entry, same trade again. So my ladder, I would enter ladder position once market comes to this point again after it has broken out, coming back to retrace. I know that this is where it should go be stop at. So my stop loss will be like below this zone, and that trade will be running. So this stop loss, I would move it from here. Let's say for instance I'm mixing. Let me go to the position calculator and show you people an example. Let's say I have a $1,000 account and I'm mixing $100. So I want to show you how to make money. So we calculate. It tells me I should use 0.42 lot size. So I'm using 0.42 lot size here. So it tells me to use 0.42 lot size here, risking $100. If this one hits TP, I'm coming out with what? $1,200. Now I've added another position. I now break even the stop loss here. I move it to this new entry stop loss, and this new entry, that same 1%, that same 10% I was risking, which is $100. Now I'm risking it here. You understand? I go again, calculate it. How many pips is this one? 0.7 pips. You understand? I calculate it. You get and put the lot size it tells me to enter just to lose only $100. Now I break even, like the stop loss from here, I move it to this part. So it means that if this one hits SL, I'm going to lose only $100, but the profit from year to year will cater for it, because the profit from year to year might be 1:3 or so. You understand? So it should just be, maybe I'll come out with maybe 2% after if it hits SL. But if it goes in my favor, I will be making, this one is giving me 1,200. This one is giving me now $900. Imagine 1,200 plus 900, that is around 21%. So that is another entry. Now this is another spot again. That is this one is running. This is a neckline. It's created here. This was a candle that broke out of that neckline. This is another entry, the second candle, and stop loss below the candle that broke out of that neckline. You understand? TP, same spot again. So now this stop loss, I will move it from here now to this one. Remember, this one was moved to this point, so I'll move all of them now to this one. So it's only this one that is running 1% risk again. That same $100. This one is giving me 1,200. This one is giving me 900. This one is giving me 400. You understand? Altogether should be around 25%. If I'm not actually mistaken from this calculation, 25% thereabouts. You understand? Just a trade that would have given me 1:12 is now giving me 25%. You understand? That is it's giving me $2,500 instead of giving me $1,200. So that's one. Now this other trade here, before I round up, this other trade too, same thing. When it's pushed up, you understand, apart from this neckline, because this one was an immediate, like instant entry, like sniper entry, I'm not there to start looking for what's it called, confirmation, because this, if I was waiting for a confirmation, it will actually be like this. This would have been a neckline. This would have been my neckline, and this was a candle that broke out, so it would have been an entry here. So this is more like another trade entry here, and let me show you guys. One trade is running, stop loss below this candle that broke out, and targets this spot here. So you see how to maximize it. First entry is running. Second one, this one is 1:7. This one is 1:6. Imagine risking 100 to get 7. This is the risk to reward here. 1:7. Imagine risking 100 to get 700. Then another entry again to get 600, because this one has broken even. Now, and that's risk you were risking here. You're now risking it here. You understand? Now when it pushed up, came down, broke it, came back to retest. Even this breaking has already hit TP, so I won't want to enter all this retest because it's already close to the TP. So 1:7, 1:6 gives me like 13% instead of just giving me 700%. So guys, that's just majorly it. That's it on today's video. If you are new to this channel, do well to hit the subscribe button, turn on post notifications to get notified when I drop the last part of this particular series. You understand? The last part will be more on psychology and a brief of what you should know as a gold trader. You get. So guys, see you on my next series.